This is Matt Bennett. Welcome to the Grain Marketing Podcast. We're here today to talk about several different items. Of course, I'm going to detail the USDA report first, talk a little bit about some of the adjustments they made and maybe some adjustments that I might see moving forward. There were some surprises, I think, as most of you would probably agree. The other thing I want to talk about, of course, is some of this business that we've seen done here recently. And then we're going to talk a little bit about weather in South America. So, let me pull up my let me pull up my screen here for you, and we will look at first thing we want to look at is U.S. corn supply and demand. And so essentially what we've got here is a 186 yield. I know a lot of you guys don't necessarily agree with that. I've heard from several of you that have said that as such. And so, what it boils down to, though, is that harvest is essentially completed. I think as of yesterday, the USDA said we're 91% done. So, we're pretty much wrapped up. But this survey in November includes farmers' surveys this year. Most people felt like USDA probably didn't get around to surveying as many people as before because of the government shutdown and reduced funding, yada, yada, yada. Actually, they surveyed more than what they did a year ago. At least that's what the report said. And so if you look at, for instance, 90 million harvested acres at a 186, that's massive production, okay? But the thing is that what you've got, as this balance sheet will show you, is that carryout actually only went up a little bit. So we're looking at a 2.154 carry. With that being the case, you've got record U.S. demand for corn, okay? USDA increased exports, okay? But if you look at what's the pace of our exports currently, we're actually outpacing what USDA suggested even on this report, and so we'll talk in more detail about that as we go. But next thing I want to show you here is essentially, the supply and use for world. I mean, the world supply and use is just incredible, to say the least. What you've got is increased production. As you can see at the far right, second one down, 55 million ton increase in world supply, world production, if you will. Okay, so world production goes up 55 million tons for this year. And if you look at the carryout, it goes from 291 million tons to 281 million tons this year. And so what's that saying? That's saying that our overall usage of corn is outpacing a 55 million or 55 million metric ton increase in production, outpacing that by 10 million ton. And so you've got unprecedented record world demand, as well. And so clearly that puts you in a position where if you have any issues, any weather hiccups, if you will, it can be problematic. Why do I say that? Because you just harvested a record safrinha crop this last year. You just harvested a record U.S. crop by a landslide this year. And so there's no question in my mind, that you're looking at the need, if you will, to see production continue to increase. All right. And so I don't know what acreage is going to come out at this year. I really don't. I was originally thinking acres were going to drop substantially, but in talking to several people, in this seed world, if you will, it sounds to me like the grower's not backing off near as much as what we thought they might. We know fertilizer prices are sky high, but I don't know of anybody that put on the same amount of fertilizer they did a year ago. And so I think people are still going to try to chase this corn deal, and I think acres will come down. I just don't think they're going to come down as much as what we thought before, but where could we go wrong? We planted 98 million this year. What if we only plant 95 this year and 26 coming up? If you do, weather's going to have to be darn near perfect with the kind of demand we've got. So U.S. supply and demand, 290 million bushel carry out. They did drop the yield to 53, as you can see here, down 0.6 bushels per acre. I think a lot of that drop is probably moisture related because there was a lot of excessively dry beans harvested this year. A lot of you have told me that your beans were way better than what you thought they'd be, as dry as what you were, and I'd agree with that. I think we all kind of would also agree that the later planted beans really suffered, but earlier planted beans held on way better than what we ever thought. Now, one interesting thing is that several of you reached out and said, hey, do you think USDA will increase exports due to this China deal? And as you can see on here, they actually lowered exports 50 million bushels. And my explanation to all of you when we've asked is USDA already had way too much export demand in here already, which was an assumption that China was going to buy beans. So USDA apparently is looking at this as, hey, we don't know if they're going to buy as many as we originally thought, first of all. And second of all, right now, U.S. origin beans are the most expensive beans in the world. So it's tough to assume that we're going to, continue exporting at the pace we already have, which has actually been a pretty decent pace with China not being involved. World supply and use for beans is a totally different story than corn, as you see here. There's really no change as far as carryout goes for this marketing year, 123 down to 122. Yes, a mild drawdown, but of course, U.S. Only planted low 80s on beans. So we didn't plant a lot of beans here this year. I think those bean acres will go up a little bit next year, but not substantially. But as of right now, we don't have any real issue as far as world supply and use goes on beans. What the big story is, of course, is that overall, U.S. is getting back into this export deal. And, we're going to talk about Brazil weather here shortly. One thing I want to point out is that the flash sales for corn have actually been, pretty darn solid. If you look, versus a year ago, we're actually running at a really good pace. Soybeans, it's not near as good a pace. And so, essentially what you've got is extremely good demand, for U.S. corn. U.S. soybeans has not quite been as good. Now, Brazil is still dealing with some stress as far as drought goes, especially down into Argentina. Bean meal markets continue to rally. Bean meal market always will rally if Argentina has drought issues because they're in the past they've actually exported many years over half the world's soybean meal. The last couple of years it's been a little different. They're still exporting a significant chunk of the world's soybean meal. And so if we continue to see dryness in Argentina, first of all, and second of all, just regional dryness in Brazil, it's going to call into question a couple things. They are running behind on planting pace, and that's not necessarily a good thing if you want a big safrinha crop, because safrinha crop needs to go in as quick as they can get it in, because typically whenever they get on the heels of pollination, that's when the dry season starts, and they certainly don't want to see that happen during pollination. So they need to get that crop planted by all means. I don't want to sound a huge weather alarms, but I tell you, they're going to have to see a little better weather moving forward. I think the market's going to continue to get even more excited. And so if you look at the normal amount of precipitation that's forecasted, it looks like a big chunk of Brazil is actually going to get a fair amount of rainfall. And so, if that's the case, that's certainly going to be good. But as you can see here, precipitation for southern Brazil really doesn't look like it's going to be anywhere near normal, southern Brazil and Argentina. So once again, these are things that we want to keep a very close eye on. Overall, I guess my opinion on the situation is that, the bean market's rallied over $1. Okay, so you've seen extremely strong rally. A lot of folks already put beans wherever, in bags and bins, you name it. Say, I don't want to pull them out this quickly. At the same time, rewarding a rally incrementally with some sales makes a heck of a lot of sense to me. So, I think that we need to at least consider that. If we're back in the black as far as our bean profitability goes, I don't see any reason why we wouldn't do something along the lines of an incremental sale. And then look at new crop. You've had new crop just yesterday. We were trading November beans up at $11.30. That's getting awfully close to $11 fall delivery beans in a lot of parts of the Midwest. And so fishing around for bids, if you want to sell some $11 beans, it's way better than a lot of us sold beans for this past fall. And so personal opinion is an incremental sale, 10, 20%, whatever it is that you might want to look at. Our guys at Ag Market have actually legged into about 40% of sales. But I would say a lot of that is with very flexible strategies where we can participate up to 12.50. Depends on what the grower wants to do. But I would certainly have some flexibility in your marketing plan if you're stepping in marketing. As far as corn goes, yesterday we actually saw export inspections at 2 million tons. It's just a massive number. We're continuing to see corn exports, just excellent position. And so, demand is all the rage. I mean, that's all there is to it. And so if you look at what if USDA has to drop yield? Yes, they came in at 186 this month. Last year in January, they actually dropped yield by 4 bushel. Will they do that again this year? I just posted a poll to Twitter yesterday. Hey, what do you think about the yield? 25% thought that in January it'd come in below 181. And I believe 50% of people thought that it would come in between 181 and 184. I'm not saying they're right. It just seems to me like the USDA is a little rich on yield right now. If I look at, for instance, like the first trials, I looked at that data and it said that, the first trials that I was looking at showed Iowa down substantially from a decent amount from a year ago, over 10%, and so I just don't know that Iowa's got a what was it, 215 yield? I mean, that's a awfully good yield if the trials are showing that, and those are throughout the state. If they're showing that yield is down, I just think that at some point we're going to find that maybe this national yield's been dialed up too much. Now, do I think it's still a record yield? Yeah, I do. I just feel like USDA is too high right now. So if demand continues at the pace that it is, and then you end up lowering yield, I think that it could give you some support for this market. But with that being said, why not sell incrementally into the rally? And so I'm not really in the mood to sell as much corn right now as maybe I am with beans. I mean, relatively speaking, the corn market rally hasn't been near as good as the bean market rally. But at the same time, these are better prices than what we've seen for quite some time. And you've got December corn trading up here around 470 for 26. I don't know. In my opinion, you could probably step in there and place a hedge. I'd like to see that fall delivery price up around 450 or better. I think it's a price that a lot of us can live with, just looking at some of these cash flows and balance sheets. But, by all means, if you want to look at a strategy, if you want to talk to me or one of the guys on our team, get a hold of us, because you can put a strategy in where you lock in a floor at the market or even above the market, believe it or not, as long as you're willing to give up a little bit of upside. And I've seen a lot of guys doing, like a 470 floor and putting a ceiling on at 550. I think if we get locked in on our worst sale at 550, we're going to be pretty happy. So again, I think you got to be flexible. I think you've got to put yourself in a position where you can at least lock in a worst case scenario that keeps you in the black. And the market's finally afforded us some of those opportunities. So keep the questions coming, keep the correspondence coming. I'll try to cover stuff. We'll see you again next week, and have a great week.